Good evening, ladies and gentlemen, and welcome to another episode of Oxnard Live. I'm your host, Daniel Chavez Jr. Well, one of those big topics that we always find ourselves in the crossroad is wants versus needs. Do I need to actually create a budget? And what is the importance of having a budget? I get paid every 2 weeks, so I have enough money, right? Wrong. Today, we're going to be speaking with Alfredo Martinez from CBC Federal Credit Union, and he's going to tell us the importance of establishing a budget and sticking to that budget. Also talk about the differences between a credit union and a traditional bank, such as Bank of America, Wells Fargo, and then talking about wants versus needs. So ladies and gentlemen, please join me in welcoming Alfredo Martinez from the CBC Federal Credit Union.
Hello, everybody. Thank you, Daniel, for that introduction there. Happy to be here. Such an honor. Really looking forward to having a great conversation tonight. That said, I'll kick it off right back to you.
Thank you again for taking the time to join me this evening to talk about budgeting and the importance of creating a budget. Like I said, a lot of people, they always think, well, I get paid every 2 weeks, so isn't that my budget? But obviously there's more steps to that. But before we dive into that, provide a quick introduction of yourself so that our audience know who exactly we're speaking with tonight.
Thank you, Daniel. Hi, everybody. My name is Alfredo Martinez. I am with CBC Federal Credit Union. I'm the Community Special Events Coordinator here. I've been in the credit union industry for a little bit over 6 years, almost 7 at this point. I've been with this credit union for 3 years, where I oversee community development activities. Part of these activities involve financial education, volunteerism, sponsorships, and donations. The quickest way that I sum this up is that I like to take credit union resources and disperse that to the community in the most meaningful way. I'm a Ventura County native, been here since I was born here. I was born in Ventura, raised in Oxnard, been here this entire time. I think it's incredibly meaningful to me to be able to be in a position to give back to my community. And so that's why I'm here today. And I'm really looking forward to having this conversation with you, Daniel.
Awesome. Thank you again for that quick introduction and for being with us this evening. So I want to jump into, because there's always been that kind of that discussion amongst people where they talk about pros and cons with the credit union. There's not very many credit unions in Ventura County. We have CBC, we have Ventura County Credit Union, we have Premier America. And I believe that's actually it. But yet we see the other banks, Wells Fargo, Bank of America, Citi, Chase, and the list goes on. So what are the differences between the two types of banking systems and the pros and cons with going with the credit union?
That's a great question. A lot to unpack there. I'll just start off by saying the simplest way to differentiate these two is by their business model. I think that's the easiest way. I'll start there. Banks are for-profit institutions, so they have shareholders, and these shareholders need to make dividends on their dollars, meaning that they're a for-profit institution, meaning that they're going to make money off your loans, your deposits, and pay that back to their shareholders. The credit union is a little bit flipped. We're not-for-profit financial cooperatives, and so we operate with the members' interest. And there's a key difference there. At a bank, you're a customer. At a credit union, you're a member. You're buying into the philosophy of a credit union by joining a credit union. That means that you understand that the implications of being a credit union member versus a bank, and you kind of align more your philosophical point of view that way. I would say that's the philosophical difference. But there is quite a lot more to that, So one of the biggest differences as well is how we essentially incorporate ourselves into the community. Different credit unions have different missions, and they're brought forth by different ways. So as an example, I'll use our credit union. We started in 1952 on the Naval Sea Base. We've been in this community since then. We started with $500 assets, and now we're a little bit over 600 million in assets. And so we're located all over Ventura County. And I would simply sum up the credit union difference is really just trying to be a community partner, whether that's with us, whether that's at VCCU or any other credit union in town. Typically, we have better rates. And that's generally how most people come to learn of us. A lot of people don't really understand credit unions. They know that they're like banks, but they don't really get the key differences there. And so usually the way they find out about us is when they're purchasing a vehicle or needing a home loan, just because our rates are competitive, which leads me to one of the pros is that we typically offer better rates, usually better service and more hospitable service. So I'm going to give one con, but then I'll stop there to let you interject there, Daniel. One of the biggest cons about the credit unions is really the infrastructure. And what I mean by that is multi-billion-dollar banks such as Wells Fargo, Chase, they have the resources to leverage digital solutions, leverage branches, things of that nature. We combat them in our own way, but I would say that we're not on par to them just because we don't have the resources that these multi-billion-dollar banks do.
Wow. Do you ever get customers or clients that are new members interested in the credit unions come in and say, well, I don't have good credit or I don't have credit. Can I still be a member of this bank? Or is the title is just credit, it's just part of the name. It's not necessarily that you actually have to have credit.
That's a great question. There are different expectations and different assumptions out there in the community, and so one of the ways to become a member doesn't really require a credit per se. The credit union is really just the governing body, the NCUA, and this is going far back into history as far as the origins of the credit union movement. But to your question, is that no, we don't. If you have bad credit, there are solutions in that case for the credit union. In our credit union, we offer a second chance. So if you happen to have a bad experience at another bank or so forth, as you imagine, if you find yourself in that situation, you know how hard it is to actually receive services. And so the credit union has a more lenient policies, more forgiving policies, and usually that's another route that people find out about us.
Now, because the credit union is so opposite of what the corporate banks, Wells Fargo and them, the credit union is more member driven. Are the credit unions more likely to work with the members if a member falls on hard times, or maybe they overdraft their account and it's their first time? Or what are the benefits that differentiate the credit union versus one of the other banks?
Great question, Daniel. Top of my mind, the one that I used to, just as a little quick anecdote here, I used to work on the front lines. I used to be a member facing, used to work in loans. And so I would have conversations with individuals about these same exact questions that you're bringing up. One of the biggest differences that I can say is that we're a lot more lenient when it comes to loan repayment. And what I mean by that is that most banks, if you're late one day, 2 days, they'll charge you $28 to $35, somewhere in between there. We have a 7-day grace period on your due date. So to me, that's an immediate huge benefit, right? Talking about finances, talking about organized finances, sometimes we find ourselves in trouble, right? Hardships. That's just life. And so at our credit union, our fees are a lot lower than you will find at a traditional bank. And then we also have, as example, we have the 7-day grace period for our loans. We have skip a pay, which means is that if you know that you can't afford this month, you pay 25, I believe is the fee right now. Don't quote me on that, but you can skip that month's payment, whether that's a mortgage, auto loan. So you usually don't find these types of benefits at a corporate bank. And these are ways to empower yourselves or be more active in your own finances.
Wow, that's great, because you know as well as I know, our paychecks don't always end up falling on the exact same date in order to line up with loan payments. Sometimes it's a few days after, or a few days, maybe a week later. So having that 7-day grace period is a benefit for the members. Now, the difference, and correct me if I'm wrong, the differences between a credit union system and a corporate system is that the credit union actually have its members serve as the board of directors, correct? And as well as the corporate, whereas the corporate one, they kind of have their own, board of directors, but they're not necessarily their members. Am I right?
That's correct. So each credit union holds an annual meeting. In that annual meeting, you have the opportunity to raise your hand on the floor and nominate yourself as a board of director, which then follows a process. So this is member owned, and that's the key difference here, that it's member owned. You as a member open a share with $5. You're buying into this membership, which gives you rights, political rights in the credit union movement, specifically during, and you usually showcase this in the annual meetings that we hold annually, and you can literally drive the credit union from that angle.
Now, the insurance or the bonding for the credit union is different from the corporate banking system. I believe the banking system has, I'm not even going to try to say the acronyms, but can you talk a little bit about the differences with the insurance and bonding between the two, and the benefits or, the protections that go with it?
Sure. So what you're referring to is the governing bodies that essentially set the regulatory standards for both for-profit institutions and nonprofit institutions. The difference there is that for the banks, you have the FDIC, and for the credit unions, you have the NCUA. I can't remember the FDIC acronym, but for the NCUA, it's the NCUA. And essentially, these are the governing bodies who set these regulatory policies, et cetera. The biggest thing there is really the insurance, and you're going to find that this insurance is the same at a corporate bank and at a credit union. The insurance here is about a $250,000 insurance that the federal government will protect your funds in event of a natural disaster, something that we did not expect, essentially. And so, long story short, to your question, is that the insurances are the same. I'm not too familiar with the law behind it or the policies, to be quite honest with you, but I do know that much. And so you're as protected as you would be at a credit union as you would be as a bank.
Good to know. Final question, then we're going to move on to our next topic, is because the CBC Federal Credit Union, the name, CBC, you think CBC, you think Naval Base. You mentioned that it started on the Naval Base. Do you have to be in the military to be part of the CBC Federal Credit Union?
That's only one way to enter our credit union. Each credit union, depending on their charter, has different criteria for membership. For us, you either have to live, work, study, worship in Ventura County, or be a part of one of our groups. And so essentially, almost anybody in our area can become a member. We're looking currently in different ways to open up that membership to allow more folks to be able to join, but that really does encapsulate all Ventura County residents in one way, shape, form, or another.
Wow. So if anybody's thinking about joining CBC, do not be afraid of the name. You definitely could qualify for one of those things. Thank you for sharing that information about the difference between a for-profit and nonprofit banking systems, and pros and cons. So the next topic that I want to jump into is budgeting. As I mentioned at the top of the show, is that everyone thinks, why do I need a budget? I get my paychecks, they come in, I pay my bills, that's done. Whatever money I have left over, so be it. But tell us, what is the importance of establishing a budget and sticking with that budget?
Great question. I'm a huge sports person, so I really like using analogies. And one of the analogies I use is whether you're a basketball fan, a soccer fan, football fan, every team has a game plan. And you want to think of yourself as your household unit. You need to have a game plan for your finances. And so how do you begin contemplating such a large task? For a lot of folks, they've never had the education or the training to build a budget. We all have different starting places when it comes to financial education, and that's why part of the reason what we do. And so to your question, why is it important? Well, it helps you keep track of your expenses. It helps you keep track of your debts. It essentially gives you that confidence to say, hey, yes, I can do this, or maybe I need to take a step back from this. Really, it's just a way to keep yourself accountable. And usually budgets are in tandem with goals. If you have outlined goals, whether it's to buy a car, buy a home, save for retirement, whatever it may be, how do you get there? Well, it's by organizing yourselves through budgets. That's the quickest and easiest way to answer your question there.
Now, what about those situations where credit card companies, they send out a credit card, no introductory fees, you get a credit limit of $1,500, and you start collecting all these credit cards. You go to Lowe's, go to Target, and obviously that's not the right approach, collecting all of these credit cards, because now you're essentially going to end up putting yourself in debt. What is your advice or recommendations when all of these credit card offers are being thrown at people, and they do sound really, really good, but then there's a thing called the APR percentage rate where people end up getting tripped up on?
Credit card debt. We're in a time right now where a lot of folks are meeting their means through credit, and that's just the reality that we're in today. And so, to your question, is as simply as I can put it, and I'll be fully transparent here. I learned the hard way during my undergrad years. I had a credit card. I thought it was fun. I wasn't as financially responsible as I should be. So I'm speaking from experience, and honestly, you only want to use them when you need them. If you find yourself getting really attractive offers, you're putting yourself in a position where you're going to have to make some consumer decisions. I have this credit card. I see that new toy that I want, or the new TV that's coming out, the new model of this and that. Now you're putting yourself in a different headspace. And so I would suggest or recommend that you have 1 to 2 credit cards that, meet your needs. And really it comes down to discipline, to be quite honest with you, is having the discipline to say, you know what, I need to differentiate a want versus a need, which is the topic of today.
Yeah, definitely. I will join you within saying that I too, I had just turned 18. I get this letter from Capital One that they want to give me a credit limit of $1,500. 18-year-old with a $1,500 credit limit on a credit card. Oh, I went wild, and I end up messing up because, one, I had no guidance as to what was the appropriate steps to take in order to protect myself, to protect my credit score, because as we all know, credit score is extremely important. It's what you need to purchase a house, to get a loan, to get a car, and so many other different things. For the young adults that are graduating from high school, that are transitioning into adulthood, getting their first, second jobs, or seeing these credit card offers, what steps should they be taking in order to protect themselves financially and to protect their credit score as they're progressing through their adult years?
Such a great question. The best way I can answer that is really through education, being proactive in that. It's interesting to be at a point in life where I'm now instructing younger individuals. Oxnard College is an example to, hey, do this, but at the same time, I wasn't taking the advice at that time, whether I had it or not. So for a young person who is getting these really attractive offers, because these banks are approaching students, whether it's Apple, whether it's Chase, whether it's they're targeting young people. This is part of their marketing. This is what they do. As easy as it is to say sign on the dotted line and sign and get that $2,000 limit, just be really conscious of what the implications of those mean. And so one of the things that I do at Oxnard College is I say, hey, if you max out your credit card at 19, and let's say it's a $2,000 limit, and you've run hardships, this is how much you'll actually pay 5 years down the road. So really think about these things. And I think that if there's a young individual listening today, and you're not too sure where to go or where to begin, I always say, go back to your financial institution. Be mindful of the big banks. Consider a credit union. I'm not going to just plug us, but just credit unions in general, just because we have usually better resources, financial education centers, whether it's through a workshop or through online learning. There are avenues and resources out there for young individuals who are tackling these new obstacles. And I also want to add that we're in a very diverse community. And that means that some of this knowledge isn't passed down or retained generationally. I'm one of those, individuals. And so you want to be as proactive as you can to educate yourself on money matters. So that way you can pass that on, maybe to the family household, maybe to your friend, to your neighbor, whoever that may be.
Now, I want to ask about that because as you mentioned, we are a very diverse community, generationally, financially, ethnicity is very diverse here in Ventura County, and specifically in the Oxnard Port Hueneme area. Are you finding the challenges of being able to reach out to individuals and educate them on the importance of creating a financial plan, a budget, and having them stick with it, and ultimately building the foundation of stable financial health?
You hit it on the head there. It's a huge challenge, not just for credit unions, but for banks. There's, especially in our community here, and I'll just refer to Oxnard. There's a large Hispanic population. Trust is a hard thing earned, and that's for good reason. A lot of these individuals, the underserved, the underbanked, have had terrible experiences. They're fearful of committing those experiences once more, and so the first hurdle is just gaining their trust before you can even give them the education. And so how do you do that? Well, you have to have meaningful services and meaningful products that truly do help the individual and the family unit. And so once we kind of convey that trust, that say, hey, we're really here on your side, then comes the education. But you're always still trying to break down that trust, the distrust towards financial institutions. I'll add further that a lot of Latino countries don't have credit systems. Credit scores are new. When a lot of immigrants arrive, this is a new concept. So not only do they have these predispositions to financial institutions, but they're overloaded and overwhelmed by trying to understand a completely new system of how things work here.
I want to ask, because in keeping in line with the whole education thing, and you brought up Oxnard College, CBC, yourself and Oxnard College has actually teamed up together along with a local charter school to try to educate our college students, our high school students, on the importance of establishing and being financially conscious when dealing with these financial situations. Can you touch a little bit about that and the partnerships that are being created throughout the communities?
Absolutely. So this is going to be our second school year that we have participated and assisted Oxnard College in providing financial education. It's been quite a challenge due to the pandemic. A lot of challenges on Oxnard College's end, a lot of challenges on our end, and so a lot of things have moved virtual. And so what we have seen is a lot of needs essentially not being met. And when we actually come onto campus and we just have these conversations, a lot of these students are quite just surprised. One, that this is actually happening, and two, that they didn't realize they needed this information. It's almost that it wasn't even on their radar. So we're kind of faced with an interesting dilemma. Our society, our community, the state of California doesn't mandate financial education, and so it's basically partnerships that we have to develop to do so. So that's a little bit about Oxnard College. The charter school, who represents our youth, our high school students, the exact same thing. We try to deliver meaningful conversations, whether it's a workshop, an actual training, to kind of inspire the next financial thinkers. It's all about kind of intervening as early as the better, to be quite honest with you. And we try to do that in meaningful ways.
Awesome. I think that's really, really great. Back in 2019, I participated in the Oxnard Chamber Leadership Academy, where it's 10 months of exploring the different fields that keep the economy of Oxnard going. And one of those big topics was about our high schoolers and financial education and how it's lacking in the school system. It's not part of the curriculum. So these partnerships to be able to prepare our youth, I think is very, very important. And, I give big thumbs up to the banking institutions that are taking those steps to create these partnerships so that we're educating our youth so that they don't end up in debt at 20 or 19 years old, whatever it may be, and that they have a good, long lasting financial, healthy life. I think is the big one is the
Right.
healthy life. So I want to talk about wants versus needs. A lot of times these two get confused. Um, I may want a 55-inch TV, but in the back of my mind, I say, no, I need that 55-inch TV. So how can individuals differentiate between a want and a need, and still be able to keep a healthy financial plan?
Great question. It's interesting. I've had this conversation with high school students, with college students, and adults alike. And the consensus that I've gotten is that most people know the differences between wants and needs, but we make a conscious decision to say, you know what, that's okay. We rationalize our expenses some way, somehow, some form. And so I'd like to at least provide a basic definition of the two, so that way there is that context. So a want really is something that enhances our life, but we don't necessarily need to operate our daily functions. Whereas a need is just that. Whether it's a service, whether it's a product that we need to operate our daily lives. And so how do you start thinking and kind of aligning your mind to say, hey, this is how I should start thinking about it? The quickest way to do this, in my opinion, is to grab your bank statement at least 1 month, get 4 highlighters, and highlight needs in one color, wants in another, your debts in another, and then your savings in another. And then you just see what color pops up the most. And that way you at least get that immediate visual, like, hey, maybe I am spending too much in this area. Maybe I need to reconsider. In my experience, people make better decisions when they actually understand or see something in front of them that makes sense. So if they know that their expenses are going out in one way, then they're more likely to say, hey, maybe I need to change this, or I need to change the way I'm spending here, because I'm spending $100 on Starbucks every month. And so if you think about that, that could be a large savings. Maybe you start doing coffee at home for half the price.
Now, it's funny that you mentioned Starbucks, because it's just so easy. They have their app. You can do an automatic reload on your app, and every time you go to Starbucks, bam, you have money on your card. But for some, they would argue that that's a need, that I need to have my Starbucks in order to get my day started. That's how I function. Is that truly a need, or is that more of a want? And you just mentioned it may be cheaper just to make the coffee at home.
Right. So kind of going back to one of your first question, I think that as consumers, we rationalize our expenses and our purchases. We want to feel good about what we're doing, right? So whether you buy into Starbucks and you're buying it every day, ask yourself, how much money would I be saving if I went a more cheaper alternative? Maybe I bought their ground bean, have a coffee maker at home, just expense the $50 to buy that coffee maker, and then just make coffee, and then do a cost analysis. Obviously, that this is something a little bit further along for people who are just starting off, but just put some thought into that and really understand how much of your money is going towards some of these expenses, whether it's Starbucks, whether it's Netflix, any subscription services. They're nice to haves, in my opinion. But if you have goals like buying a home, buying a car, savings, you can align your spending to that, and that way you can achieve your goals, which is really the premise of understanding needs versus wants, is that understanding this will ultimately allow you to achieve your financial goals.
Now, is it reasonable to say that a want is more like those short bursts of joy? You get your joy when you have your Starbucks. You get your joy when you have your streaming services subscription. You get your joy when you purchase a TV, PlayStation, whatever it may be. Whereas those needs, it's like, well, I need water in my home, so I need to have that. I need to have internet so that I can go to school, or but then that might even play into it. Is internet a need or a want? So what is the most simplest way to determine a want and a need for individuals that may rationale a little too much, that they ultimately convince themselves like, no, this is more of a need, not necessarily a want?
I love this question. I am by no means advocating that don't spend on wants. No, you need to live your life. You need to enjoy yourself. Absolutely. But it's all about balance, right? And so I think that I'm trying to put it in the simplest way that I can. Uh, and I think the way I can do that is by going back to your game plan, your budget. If you've already kind of itemized or have already kind of said, you know what, this is how much I'm going to spend in this category, my wants category. I know that I have a Netflix bill. I know that I have this or that, or my Starbucks. I'm not saying quit Starbucks today. No, I don't want to. I'm not saying that. But if it's part of your plan and it makes financial sense that align with your goals, then I say go for it. You know, we all have our taste. We all have our likes. There's no problem in doing that. But once it starts becoming 30% of your income or a larger percent of your income, then you may be running into larger issues. Then you may be having spending issues. So this is all in the context of understanding how much you should be putting toward each category. As an example, there's a 50-30-20 rule. This is a budgeting concept. And 50%, no more than 50% of your expenses on needs, no more than 30% on wants, and no more than 20% on debt or savings. So it's all in context, really.
Wow. Yeah, definitely there. It's I don't know. For me, I will admit to that. I was one of those that did Starbucks every single day. And then my wife told me, she's like, I think you're spending a little too much on Starbucks, because my drinks, they weren't the easiest drinks. You know, I would always want the modified, the customized ones that
They're
would,
nice, right?
they're delicious, but
Right.
but $12 a cup every day for an entire week, you know, 5-6 days a week, you know, I'm looking at, you know, at least a good almost 200 every 2 weeks that I'm spending on just coffee alone. And it wasn't, and sometimes I'll add a Danish or whatever else on top of there. So then I learned how to make it at home. So now I save on that and I use it more as a treat versus part of my daily routine. I know it's difficult for some people, and I know you're not advocating for people to go cold turkey with Starbucks, but trying to find that balance is sometimes difficult, because now we are seeing in the day and age those that have families that, and maybe you can touch on this too, is that those with families with younger kids, those multiple streaming services are kind of needed to keep them entertained. We're seeing, you know, we were coming out of the pandemic where now our students are going back to school, whereas they spent a good portion of the year at home. How does creating a wants and needs and a financial plan for a family differentiate from an individual creating a wants and needs and financial plan?
Right. These questions are all fantastic questions, and I'll do my best to answer them. Whenever you're doing financial planning, well, let me actually take a step back. This, to your point, this is incredibly hard to undertake alone by yourself. To try to create a financial plan and a budget requires understanding of concepts and finances. And so let me just say that you don't have to do this alone. There are resources out there for you, whether it's with your institution, another institution. You know, the first thing is being a problem solver and identifying where you can get these resources, and, you know, reaching out to individuals that you know, may be able to help. As far as differentiating between a family unit versus an individual, I think that the easiest way to answer that is really based on goals. An individual's goal list may look different than a family's goal list, right? You brought up a really great point. We're in such a difficult time for many, where hardships are left and right, and so you tend to expense, you know, more or things that are not normal due to the circumstances that you're in. That's completely reasonable. It absolutely is. It's just a matter if we're essentially at the end of the month, are we in red or are we in black? You know, at the end of the day, you can make different purchases, but the point is that if you're ending in a deficit at the end of the month, you're hurting yourself, whether it's a family unit or an individual. It makes no difference. You're essentially hurting yourself. And so I always go back to seeking a financial professional, a financial planner, making sure that you have a game plan. And there's no that's probably one of the greatest worries that most families are facing today is finances. How can I manage my finances under unpredictable times with COVID happening? You name it. There's such volatile times right now. And so getting prepared, taking the time to organize yourselves. And I know it's a challenge, and even just to do that, but finding ways to do so may be worthwhile and really a good consideration at this point.
Wow, thank you for that. And ladies and gentlemen, I hope you're enjoying this conversation. This is only the tip of the iceberg because we're actually going to have Alfredo join us next week as we dive a little bit deeper, essentially calling it Budget 101. So you're able to get a little bit more tools. And then, of course, visit the CBC Credit Union, visit your local credit union, not necessarily just CBC, but any credit union, any banking system, and try to gain that information. Final question I want to ask about, and we can do a very short response because I'm sure we'll touch more into it next week. 457s, 401s, all those saving plans. When should they start? The benefits of having them and the cons of having them.
So for the audience, we're talking about retirement accounts, and usually these are employer-sponsored accounts. So whether it's a 403B, a 457, or a 401k, these are the most commonly used tools to save for retirement nowadays. Most employers offer them, and they offer incredible benefits. And some employers even match. So let me just kind of give a little bit synopsis here so that we are all on the same page. I'll just stick to 401ks to make it simple. I think that's the most familiar investment vehicle to folks. So the 401k is usually offered by your employer, or you can find this through an investment firm. And a 401k is really just a fancy tax code that has different tax implications for retirement and savings. So the government is saying, hey, if you want to save for your retirement, we're going to offer this vehicle that's tax protected, that allows you to retire and essentially help you in your retirement. Some of the benefits right off the bat, well, one, you're saving, which is fantastic. Whether it's $1 a week or $20 a week, setting that habit has such enormous implications. And I can't stress that enough. If you're not in the position to, have $50 of your paycheck go towards retirement, even if it's 10, 20, the habit has incredible positive implications. Some of the immediate benefits for individuals who do have a 401k, some of your employers may match. And what I mean by that is that, as an example, let's say that your employer matches up to 4%. What that means really is that if you allocate 4% of your paycheck for that pay period towards your 401k, your employer says, hey, I see you're doing well. This is a benefit that we offer. We're going to match your 4%, but we're just going to match it at 4%, no higher. So what does that really mean? That really means that your employer is giving you money. And if you're hearing this right now and you're saying, you know what, I actually heard my HR person talk about this, I'm not really subscribed to that, and they offer a match, you're leaving money on the table. And what that means is that you're actually kind of not taking advantage of this. And really the biggest benefit here is time. The earlier you start, the better. If you deposit $100 a month, $150 a month for 40 years, depending on how the market is, you may be sitting upwards anywhere from $500,000 to $1 million just in retirement savings. So if you're hearing this and you're like, wow, this sounds great, and you're not taking advantages, I would suggest that you go speak to your HR department or find an investment firm that can help you with this, just because you're really setting yourself up, you're setting your nest egg for when you hit those, pieces in your life when you're down the road, if that makes sense.
Wow. Well, now I got to go check with my HR and see if we offer the matching program. Well, Alfredo, again, I appreciate you joining us this evening. And as we are, just again, touching the tip of the iceberg when we're dealing with budgeting. You will be joining us next week and on 2 days, on the 8th with our Spanish program. It's the return of Oxnard Live in Espanol with Adam Lopez. And then on the 9th with me, as we go a little bit more into details on financial stability, creating that plan, that budget, so that everyone is on the right path. Are there any final words you want to give as we wrap up tonight's conversation?
Uh, First off, yes, but let me just say thank you for this opportunity. I love talking about this. Economic empowerment is a personal passion of mine. This is something that I care for deeply growing up in the environment that I did here in Ventura County. And secondly, yes, if any of this all sounded well to you, the next time we chat about this, we're actually going to have tools, actual strategies, things that you'll be able to take back with you to maybe start this or even just begin the conversation at home. And so I really thank you, Daniel. I think Oxnard Live for this opportunity, and I hope that this inspired some curiosity in the world of personal finance.
Awesome. Thank you. And again, ladies and gentlemen, Alfredo is going to be coming back next week with more tools, more resources, more information. And if you know anybody that is interested or curious about financial stability, creating those budgets, remember, our English show is on Thursday, the 9th. Our Spanish show is returning with Oxnard Live in Espanol with Adam Lopez. That's going to be on the 8th, which is a Wednesday. So it's all right here on our YouTube channel, on our Facebook. We share it across multiple social media platforms. So share the information with individuals so that they are aware of the importance of establishing, especially right now with COVID, that I believe, and Alfredo, you would agree with me that right now is even more important to emphasize the importance of having a strong financial plan, especially with COVID and the up and down of, is it going to go lockdown? Is it not going to go lockdown? What restrictions are going to come into play? And as we saw, the hardships that end up coming about it. So, ladies and gentlemen, this is Oxnard Live. Our guest today was Alfredo Martinez from CBC Federal Credit Union. Visit their website, visit their location that they have to learn a little bit more, or you can tune in right here again next week, Wednesday, for our Oxnard Live in Espanol with Adam Lopez. Full conversation in Spanish about the financial benefits. And then the following day, Oxnard Live with me, all in English. That's right here on Oxnard Live. Visit our website at oxnardlive.net for upcoming episodes, past episodes, and be sure to subscribe to our YouTube channel. I'm your host, Daniel Chavez Jr., and this is Oxnard Live, all live and 100% real. Have a great night, everyone. Thank you again, Alfredo.